The first 5 seconds matter, so here's the solution up front. Drawdown doesn't destroy discipline, your reaction to it does. The moment you learn how to respond instead of react, drawdown stops turning you into someone you don't recognize, and revenge trading loses its power over you. You've experienced this shift before. You start a week calm, patient, disciplined. You follow your rules. You wait for confirmation. You size correctly. Then a losing streak hits. Not one loss, but a few in a row. Suddenly the chart looks different. Your body feels different. The same setups don't feel safe anymore. That's when drawdown stops being a number and starts becoming psychological pressure. At first, you tell yourself you're fine. Losses are part of the game. You repeat it like a mantra, but deep down, something changes. You start watching the P&L more closely. You calculate how long it'll take to recover. You feel urgency creeping in. Discipline hasn't disappeared yet, but it's under attack. This is where drawdown begins its work. It quietly shifts your focus from execution to recovery. Instead of asking, "Is this a valid trade?" you start asking, "Can this get me back to break even?" That single question is the seed of revenge trading. You might not even notice the first compromise. Maybe you enter a little earlier than usual. You justify it by saying you've seen this setup work before. Maybe you increase size slightly, telling yourself it's still within reason. Maybe you take a trade that's almost your setup. These aren't reckless moves yet. They're subtle, and that's why they're dangerous. Drawdown makes disciplined traders impatient. Waiting feels unbearable when you're underwater. Every missed move feels personal. You watch price run without you and think, "I can't afford to sit out anymore." That's not logic. That's drawdown talking. If this sounds familiar, pause for a moment. Like the video, subscribe to the channel. Share this with someone who keeps saying, "I just need one good trade to get back." Awareness is the first line of defense. As drawdown deepens, the internal dialogue gets louder. You start negotiating with yourself. Just this once, "I'll go back to discipline after I recover. I know what I'm doing." Discipline becomes conditional, and the moment discipline has conditions, it's already broken. Revenge trading rarely starts with anger. It starts with urgency. You feel pressure to fix the situation. You feel responsible for the losses. You want relief. The market becomes the place you go to feel better, not the place you go to execute well. That's when things escalate. You take a loss and immediately look for another trade, not because the market presented an opportunity, but because sitting with the loss feels intolerable. You want to act. You want to do something. Action feels like control, even when it's not. Sometimes you get lucky. You win a trade during drawdown after forcing it. That win feels incredible. It feels like proof that your aggression is justified. And now the trap snaps shut. Your brain connects emotional urgency with reward. The next time drawdown hits, revenge trading feels even more tempting. Drawdown also attacks your identity. If you see yourself as a disciplined trader, losing streaks feel threatening. You don't just lose money, you lose confidence in who you think you are. To protect that identity, you start fighting the market. You refuse to accept that the edge can have losing periods. You assume something must be wrong and that you need to act fast. This is why disciplined traders are often more vulnerable to revenge trading than beginners. Beginners expect chaos. Disciplined traders expect consistency. When consistency disappears temporarily, it creates cognitive dissonance. Revenge trading becomes a way to restore order quickly. So how do you stop drawdown from turning you into someone you're not? The first solution is redefining what drawdown means. Drawdown is not failure. It's not a sign that you're broken. It's a normal statistical phase of any edge. When you internalize this, you stop personalizing losses. Losses become data, not verdicts. You need to know your system's expected drawdown in advance, not roughly, precisely. If your current drawdown is within expectation, nothing is wrong. When you know this, urgency drops. You're no longer trying to fix something that isn't broken. The second solution is implementing automatic breaks. When drawdown hits a predefined level, you reduce size or stop trading temporarily. This isn't weakness, it's professionalism. Athletes rest injured muscles, traders must rest damaged psychology. For example, if you hit 3 consecutive losses or a specific percentage drawdown, you step back, you review, you don't trade live. This rule alone saves accounts. It creates space between emotion and action. The third solution is separating recovery from trading. Recovery is not something you do inside the market. It's something that happens over time through execution. When you try to recover quickly, you force trades. When you accept gradual recovery, patience returns. You don't get out of drawdown by trading more. You get out of drawdown by trading better. And sometimes, trading better means trading less. Drop a comment if you've ever felt the urge to make it back today. That urge is universal and manageable once you recognize it. The fourth solution is shifting your scorecard. During drawdown, you stop measuring success by profit. You measure it by rule following. If you followed your rules perfectly and lost money, that day is a win. This mindset protects discipline when money motivation collapses. The fifth solution is slowing everything down. Drawdown speeds up your thoughts. You counter that by slowing execution. Fewer trades, more confirmation, longer pauses. This isn't about confidence, it's about containment. You're containing damage while the probabilities play out. Another powerful technique is asking one question before every trade during drawdown. Would I take this trade if I were at equity highs? If the answer is no, you don't trade. That single question instantly exposes revenge motivation. Over time, something changes when you apply these solutions. Drawdown stops feeling like an emergency. It becomes a phase. Discipline stops being fragile. It becomes resilient. You no longer fear losing streaks because you know how you'll respond. Here's the final escalation most traders miss. Revenge trading doesn't come from bad emotions. It comes from unmanaged emotions. Drawdown creates pressure. Pressure demands structure. Without structure, discipline collapses. If this video is helping you rethink how you handle drawdown, like it, subscribe, and share it. This channel exists to protect traders from psychological mistakes strategies can't fix. You don't need to eliminate drawdown, you need to eliminate impulsive reactions to it. When you do, disciplined trading stays intact even under pressure. If you made it to the end, you're already ahead of most traders because you're willing to address behavior, not just outcomes. Like the video, subscribe to the channel, comment what you struggle with most during drawdown,